Hello again, everybody. Welcome back to Hot Desk, quick tips and tricks on using the Real Desk platform. I'm Mark, your chief desk jockey, and today we're going to be talking about tiered deductions. Very powerful feature that some of you might not be aware of, or maybe you haven't used before. It's really easy to use, and I'm going to show you exactly how. So to set up any type of deduction, to go into accounting and then into deduction manager, and then to add a deduction, click add deduction. So you can do this for all of your agents all at the same time if everybody's on the same plan, or you can pick multiple agents or just one. Today, just to have some fun, let's say that we're going to do Team A and Team B on two different plans. The ladies are going to be on Team A because ladies first, and the gentlemen will be on Team B. So let's pick out our Team A. Let's say that Alberta is a lady, and Yan, and that's it. We're going to choose tiered deduction, and at this point you'll see that the interface changes a little bit. Let's add a new deduction type, and let's call it deal fee Team A. So we can do different types of deductions with splits, percentages, as well as deal fee. So let's say that Team A is going to be on a deal fee plan. So the deduction type is going to be fee amount. And with the tier type, you have two different options. One is commissions earned, so you pick a certain level of deduction up to the total amount of commissions earned, say the first 50,000 in commission, and you just keep going like that. And the other is deals completed, which is the first 5 deals, 10 deals, or however you want to do it. I tend to associate deal fees with deals completed and a split model with commissions earned, but it isn't required to do it that way. We're going to do this so that Team A, which is on the deal fee model, is going to go based on deals completed. So then we have to decide what's going to be the recurrence period for our deductions. You can just pick a start and end date, but mostly if you're going to do the first 5 deals, first 10 deals, first X amount in commissions, most likely you're going to want that to reset at some point. And it's very common to do that on a calendar year basis. So if we do it that way and we set our start date to January 1st and click on repeating, so that way there will be no defined end date for this deduction. It will just continue to repeat. We choose an annual recurrence, which is probably the most common. That means that, as you can see with the repeating date section below, calendar year 2024, we're going to count the number of deals everybody does, and we're going to assign the deductions levels based on that. And then on January 1st, 2025, everything resets, everybody's counter goes back to 0, and we start over. And the fact that it's repeating means that you don't have to then remember on January 1st of next year to go back in and set up a brand new deduction for everybody. As long as you don't change the way that you do your tiers, you can set this, forget this, and you'll never have to touch it really ever again. So how do we set up what amounts we're going to charge and when we're going to carry over from one level to another? That's in this next section. We can add as many tiers as we want. So let's add the first one. And it's going to be a $300 deal fee, and it's going to apply to the first 5 deals. Okay, so deals 1 to 5, $300, click add, and you'll see that it is now added. Then we can add more tiers. It's going to be a $200 deal fee. From deal 6 to, and you can see that the 6 is auto-populated based on what we've set in the first tier, so deal 6 to deal 10. We'll add that as well, right? And we can do this all day. It's going to be $100 from deal 11 to deal 20. We've set up 3 tiers, so how do we bring this to a close? There's a couple different ways. The way that I have it right now is if somebody gets to deal 21, they're going to get charged nothing. So in this model, once we've run through all the tiers, there's nothing charged beyond that point. The other way that we could do it, add a 4th tier, and let's say 21 to blank, and that's going to be $50. In that case, this will go on forever. So even if they did 200 deals, on deal 200 they would still be getting charged $50. Whereas if we get rid of this and we just leave it as deal 11 to 20, again, on deals 21 and beyond, they would get charged nothing. So it really depends how you want to do that. This is not a third-party deduction. It's very unlikely to be GST exempt. One feature, and I've mentioned this in previous videos too, that you might want to be aware of, particularly for the deal fee model, is the prorate option. And that means that if there's 2 agents on this deal, and they each have this $300 deal fee set up, if you don't prorate it, they'll each get charged $300, and that may not be what you actually want. You may want to just collect $300 on every deal, irrespective of how many realtors there are. If that's what you want to do, you would click prorate, and that means that that $300 would be collected off the deal, and it would be split among the 2, 3, 4, however many agents, in proportion to the percentage of commissions that they earn. So that's our Team A deduction set. We can hit save. And then what about our Team B? Let's go in and choose gentleman. We'll choose tiered deduction. So we'll call it split fee Team B. We'll do a split model, a percentage model, and we'll base the deduction tiers for this one on commissions earned. Again, we'll start it on January 1st. We'll make it repeating, and we'll make it an annual recurrence. So it'll be based on the first X amount of commissions earned, and then on January 1st of every new year, it will reset to 0, and we start that tier system again. So the mechanics are essentially the same. So we're gonna do a 20% split on the first $50,000 of commissions. That means that we will collect up to $10,000 in this tier, right? Because it would be up to 20% of 50,000. And if we go back in and review that, you can see how it filled in that maximum amount of $10,000. That's the first tier. Let's add another one. It's gonna be 15% from 50,001 penny up to 100,000. Let's add the third tier at 10%, and let's put this as 100,000 to 500,000. Click add, and off we go. And the same rule applies as on the deals completed deduction, where if somebody goes above $500,000, they won't get charged anything. So the other way is to leave that blank and have it go as unlimited. So that's going to be our tiers for Team B. There's no need to prorate this one because this is a percentage of each agent's earnings anyway, so it's already effectively prorated. So we'll hit save, and then we have our Team A and our Team B set. So next step is to figure out how does it all play out when we actually pay out a deal. And you might also be interested in what happens when Team A and Team B are on a deal together. How do we then account for that? So I set up exactly such a deal. So we've got Mark, who's on Team B, and Yan, who's on Team A, and we split the commissions 40-60 in Yan's favor. So when we hit create payments for the deal, the deductions will come up for each of them. So let's look at Mark, and Mark is on Team B on the split fee plan, and he gets charged 20% of his commission. So when you click on this little information icon here, you can see how many deals have I done to date so far under this plan. 0. This is the first one. So I'm on that initial tier. So from 0 to 50,000 commissions, I'm getting charged 20%. Let's look at Yan, who's on Team A, and she does a deal fee. Now her deal fee is prorated. So it would be $300 normally, but because she's got 60% of the commissions on this deal, she's paying $180. Similarly, if I click here and it says, $300 on the first 5 deals, that's the tier that she's in right now. She's done 0 deals to date. When we pay this deal out, if we want to review the deductions and sources that went into the ultimate brokerage profit, we can click here on actions and review payment deduction / expense sources. We can click on here and see all of the information about the tiers and can see how much we collected, tax, total, and this is our brokerage profit. Finally, another utility we can use is called deduction report, which is also under the accounting, and you can go in here and see all of the different historical deductions. You can filter down to a realtor, to a date range, to a particular deduction type. So if I only want to see Team B, I can filter down to that. I can export to Excel, and it gives me all of the information on all of the different deductions that I've done. So hopefully this helps you understand how it works to set up and pay out a tiered deduction. If you have any questions, please let us know. Please do like and subscribe on YouTube. It does help us quite a bit. And thanks as always for being part of the Real Desk community.